Good afternoon, everyone.
Good afternoon.
Good afternoon.
And pulling up the agenda. Yeah, it's a busy day for us over here. We got our Board of Regents meetings going on, so bear with me there. Get myself transitioned from that to this. Okay. We can go ahead and call our meeting to order. I'm showing we're right at 3:30, and we will start with our roll call.
Okay, good afternoon, everyone. We'll start with you, Chair Rogers.
Present.
Trustee Benavides. Trustee Foyt. Trustee Waugh.
Present.
Trustee Turner Whiteley. Okay, Chair Rogers, we do have a quorum.
Excellent. Do we have anyone signed up for public comment?
We do not at this time.
Okay. Do we have a motion to accept the proposed agenda?
So moved.
Second.
All right, any discussion or corrections or edit? All right, we just call for the question. All those in favor say aye.
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 All right, motion carries. So agenda is adopted. So let's go to new business. Loresto, I think you're the star of the show for this agenda item.
All right, thank you, Dr. Rogers. And thank you everyone for attending today. Our fiscal year ended 2023, ended on June 30th, and we started our financial statement audit this week. So I thought it was a good time to update the committee. I'll share my screen here. And we'll start with the consolidated sales tax, or CTX. And you can see here that we have a total of $30.4 million at the end of fiscal year 2003. That was estimated. You can see I highlighted in bold red the June 30th, the June number, and that was at $2.9 million. That was based on an average of the previous 11 months, so 4.5%. We actually got the June CTX on August 31st. There's a lag of about 2 months, so the June sales tax is distributed to the district at the end of August. So this actual total is $30.1 million. So it's about $300,000 less. But the budget was $30 million. So it still exceeded the budget, but it's shorter than the number you're seeing here. The state of Nevada actually projects their own figure. The district sometimes relies on that number. They came up with a number of approximately $28 million for the CTX for the library in 2023. We thought that was conservative, so we went with $30 million, and the budget just happened to match up with the amount collected for 2023. But you can see that the fluctuations by month are sporadic. There are a couple months here that are negative, and then 1 month that was positive to the tune of 20%. And this estimated 4.5% for the last month of the fiscal year, June, we estimated to be 4.5%, but it actually went in the other direction completely. So for the month of June, the amount was actually 2.6 million instead of 2.9. So that was a negative 4.5% for that month. And it's 1 month, but the question always is that the beginning of a trend? And from the economic indicators we keep track of, it doesn't seem like it's so far. The consumer continues to be resilient, especially here in Southern Nevada. Las Vegas is hosting the big game in February. So there's a lot of positive economic events happening. So we're not too concerned about where the CTX stands at this point. And the state who again is conservative, is projecting a CTX of $31.4 million for fiscal year 2024.
Okay.
Here is a comparison of the property tax revenues between 2022 and 2023. I want to point out that although the CTX revenues they're very unpredictable, the property taxes are not. So you'll notice here that we're estimating $58 million in total property taxes for the fiscal year end 2023. And this was as of August when we prepared this information. We have close to final numbers for property taxes, and it was pretty close. About $58.1 million is what we have on the books for fiscal year 2023. But you can see that the budget is $59 million. So that's a difference of $1 million, which is unusual. I just wanted to highlight that for the committee, because in all the projections, well, first of all, this amount that's in the budget, $59 million, is also prepared by the Nevada State Department of Taxation. They project this number based on data prepared by the Clark County Assessor's Office. That data is provided to the tax department, and they calculate the figure they expect all entities like the district are going to collect. And of all the projections I've seen, this projected number for property taxes has almost never missed. And you can see that there's a difference of $1 million, which raised a flag for us. But we did look into it thoroughly, and that's what I wanted to explain to the committee today. And just to give some background, I want to go back a little bit to the mid-2000s, where the legislature responded to the housing boom by putting in tax caps for property tax increases. So, for example, a property owner's primary residence their taxes for that year could only increase by 3% from the year before. And so other properties, including commercial property, can increase up to 8%. So an example of the impact on a taxpayer and how that's affecting us today would be a property owner who's living in, let's say, a $500,000 home, $500,000, but they subsequently move to another property that's, let's say, double that, $1 million property, but they don't inform the assessor's office that they moved and that their new primary residence is the $1 million property. So in that case, the second home that they just purchased and are living in is still taxed at 8% instead of 3%, which is what the tax cap should be. Whereas their previous home at $500,000 is being taxed at 3%, which really it should be taxed at 8%. So that's a $5 million or 5% difference, which is significant for the taxpayer and in aggregate when we account for all of these adjustments that are needed or corrections to the tax roll. Because you all might remember last summer when this got a lot of media attention. The assessor's office sent out a lot of notifications. They do this every year, informing property owners to verify the tax rates that are being applied to their properties. And it got a lot of media attention because there was a belief that this correction had to be made by the end of that fiscal year. So last year, it would have been June 30th, 2022. What actually happens is taxpayers have the subsequent 12 months. So in our case, it would be all of fiscal year 2023 to contact the assessor's office and let them know that, I have a new primary residence and that should be taxed at 3% instead of 8%. So this was happening a lot during fiscal year 2023. A lot of property owners were reaching out to the assessor's office and was informing them of the incorrect information for their property. And the assessor and the treasurer's office worked hard throughout the fiscal year to correct the record. They updated the assessed valuations on these properties. The treasurer updated the bills, sent new bills out, offered refunds where appropriate. And that was the primary contributor to lowering our expectation for property taxes. So another way to look at it is the $59 million projected last year for 2023 was correct based on the assessor's record at that time, which again includes a higher increase than that should have existed. And so that ended up being an adjustment of $1 million or $58 million total that we collected. Again, we wanted to make sure we had a thorough explanation of that, and that makes sense to us. It's understandable given the circumstances, and it is an anomaly. I wanted to point that out. I wanted to assure the trustees that there wasn't a more serious issue happening with the whole process of collecting property taxes or a risk of property values being, grossly over or underestimated. And I also I should have presented a visual of this, but we have here the fiscal year 2022 budget for property taxes, which was $53 million. And if you compare that to what was originally expected, $59 million, that's an 11% increase. But since the number is more accurately $58 million, which is what we collected, the difference between this $53 million and the $58 million is 9%. Now, a 9% increase in property taxes would be strong in any given year. That's actually above the historical average, but that's the 2% difference. The 59 compared to the 58 is 2%, $1 million, and hopefully that's understandable why there is that decrease in expected property tax revenue collections in the fiscal year. And I also wanted to add a little bit more nuance to this. As far as the timing, the State Department of Taxation calculates this revenue projection in March and distributes it to all local governments. And so that's the number that we enter into the tentative budget that's presented to the Finance and Audit Committee in April. Also in April, we received the final revenue projection from the state, and that's the number that's entered into the final budget, which is presented to the board for adoption in May. So the big drive to encourage taxpayers to update their proper tax rates really happened in June. That's after all budgets from all local governments were finalized. And from June all the way throughout fiscal year 2023, these corrections were happening. So it wasn't apparent the final impact on property taxes that this was going to have. And this was really on the library district's radar because property taxes are our primary source of revenue. We rely heavily on it, as opposed to a larger organization that doesn't rely on property taxes for their sole revenue. And this wouldn't move the needle for those organizations. But it appears that this is affecting all local governments in Nevada. Are there any questions about that so far? I thought this was an important nuance to bring to the committee's attention, especially since I myself only found what I considered a satisfactory explanation for this, since, again, I'm not accustomed to seeing any revenue shortfalls in property taxes compared to the projection.
And Trustee Whiteley has a question.
Thanks. Did I hear you correctly that this is sort of a one-time miss? You don't think that this miss will happen again, or am I misunderstanding that it will?
No, that's a great question. We don't expect a miss like this to continue going forward at this magnitude. We don't expect a serious or significant adverse impact going forward because the majority of corrections needed happened in fiscal year 2023. It's not getting the same attention in this year and likely won't going forward, even though, you make a great point in that there are likely still incorrect rates being applied. These are taxpayers who get the notification from the assessor every year, but they consider it junk mail. It's getting tossed, or for whatever reason, they're not considering or aware of the impact that it could have on their taxes. And we might actually we were likely benefiting from this unknowingly in the past. These rates, again, never got this kind of attention in years past since the caps were implemented in the mid-2000s. And so it was only recently that taxpayers are being made aware that they are probably getting taxed at a higher rate than needed. So with that said, the budget for 2024 is a little over $61 million. That's about a 6% increase from the $58 million we collected this year. And we do expect that to be collected next year for fiscal year 2024. I wouldn't expect to have the same conversation a year from now, but I'll definitely, let this committee and the trustees know if there's any concern about that going forward.
Thank
Okay.
you.
Thank you, Foresto, for that thorough explanation of the shortfall.
Going to the expenditures for the general fund, this is just a quick comparison here showing that the estimated expenditures for fiscal year 2023 is at $69 million. Again, this is currently being audited, but any adjustment shouldn't be materially different to what I'm presenting to you today. And that's $7 million under the 23 budget. And we expect that every year. I don't know if I mentioned this enough, and you'll see the bullet point there that uses the example of salaries and benefits. We budget with the expectation that every position is filled every day of the fiscal year, which doesn't happen. It's highly unlikely we would get close to that. And so that's what we consider the vacancy factor that would provide savings compared to the budget. And the same thing happens with services and supplies, another major expenditure category where we may budget, for example, legal services at a certain amount, but that's what we consider the maximum amount we might need in an upcoming budget year, but we may not actually incur those expenses, so we have savings there too. So I just wanted to show that, since there was also a $7 million increase in 2023 compared to fiscal year 2022 actual. But I have explanations here too, in that we were filling vacant positions. There are other new programs that were being implemented throughout the fiscal year. But that, again, this $76 million for 2023 is at 100%. And we do expect savings compared to that budget. So here's the entire income statement for the general fund. And I highlight here again in bold red the decrease in revenues. Because of that difference in the CTX I just discussed in June, this difference here is actually $500,000 instead of $200,000. But it's still in total $90 million in revenues, which is close to what we budgeted. You can see that the $1 million shortfall in property taxes is being offset by overages in other revenues. But here I wanted to highlight the differences or this excess, which starts with what we brought in, the $90 million in revenue, and the total expenditures actual. This is an estimate, but this is what we believe to have expended in fiscal year 2023. And that's $69 million. Again, that was $7 million less than what was budgeted, but we can control this category. This has been important throughout every budget we've prepared, in that, we see, these potential risks. Sometimes they materialize, for example, the pandemic, the financial crisis, but, we really take advantage of being able to control these expenditures, because that's what gets us this excess. We operate to generate an excess, and in 2023, that's $21 million. In order to provide a transfer to the capital projects fund. And we'll get to the capital projects fund soon. But you can see this is a significant amount in 2023, a $34 million transfer to the capital projects fund. That amount is actually the budget for the new West Las Vegas library. But of course, we've been building reserves for the new construction of the new branch for a couple of years now. And it's been our budgeting practice that has given us the ability to build this reserve, because we've been very conservative in our spending throughout the pandemic. And that's why we ended up with this beginning fund balance from prior fiscal years, which is $35 million. And even after transferring $34 million to capital projects, we're left with an ending fund balance of $23 million, which will be available for spending in 2024, and eventually transferring some of that amount to the capital projects fund in 2025. You can see here in the 2023 budget that we budgeted to end up with a $15 million fund balance, at which is 15 to 20% of our total expenditures. Because of our spending practices, we actually ended up with a $23 million fund balance, which is 34% of expenditures. So much of this fund balance will be available to transfer in future years, and that'll continue funding our, core capital programs like building maintenance and IT replacements, but it'll also give us a head start on potential, significant capital projects down the road. Moving
Excellent.
on to the capital projects, but I'm sorry, Dr. Rogers, do you have a question?
No, I just said excellent.
Okay. Here's a summary of the expenditures in the capital projects fund. I just started in 2022, just like, I presented information for the general fund going back at least a year, because it really starts at the beginning. In 2022, again, we had a lower than average budget of $5.9 million because we were still coming out of a very conservative spending practice. And we only spent $2.8 million in 2022 because much of this $5.9 million budget was for repairs and maintenance. These projects were deferred until 2023. So that's the reason we underspent in 2022, and the reason that 2023's budget spiked. Another component of that increase is about $4 million earmarked for construction of the West Las Vegas Library. Those funds weren't needed in 2023 either, and so we only spent $5 million total in the capital projects fund. And I apologize for this, but this is a typo. I used the wrong number from this financial statement, capital projects, 5032. The actual total expenditures is 5543. So it's $5 million, $5.5 million, but in total, it's close to $5 million. So if we walk through this income statement for the capital projects fund, you'll see that we normally aren't too concerned with investment income. That's a small portion of the inflows of funds to the capital projects, but it happened to, significantly outperform in 2023. And I'm sure everyone, understands the reason for that, higher interest rates for, safe investments. But I just went over the total expenditures and the reasons for why we spent $5.5 million versus the budget. And the difference here, again, just rolls over to the subsequent fiscal year. These are the funds that are available for capital project, especially the new West Las Vegas Library, which is going to be starting construction in earnest very soon. But I also highlighted here another financing source, proceeds from sale of assets to the tune of $3.2 million. That's actually for the sale of the current West Las Vegas Library. So these are additional funds that will be available for construction of the new library, but it is, again, a one-time inflow of cash. That's not something we see very often. And here's the $34 million that was transferred in. And these other financing sources are important for what we've already discussed, in that the real source of revenues or inflows of funds for capital projects is coming from the general fund. That's again why it's so important to manage the general fund or operating fund so diligently. And we also had a healthy fund balance going into 2023. It began with $23.9 million. And with all of these financing sources, we end up with $56 million at the end of the year. And I won't go into the budget for fiscal year 2024 again. We had a thorough discussion of that last May, but I really just wanted to show that we've been preparing for construction of a new library along with replenishing reserves and capital programs. And so this seems like a pretty large swing, but it's been planned for carefully over the last couple of years. And since it is audit time, again, I thought it was a perfect time to show the committee exactly where we stand. These are the numbers that are being audited, but the bottom line is the district is still financially healthy. We're well prepared going forward for any other downturns, either in the economy or anywhere else that could put the district's financial health at risk.
Loresto, I had a question. If you go back to that capital,
Yes.
yeah, that slide. For my clarification, the work that we're going to be doing, from a development perspective to raise money to support overall operations, in particular the capital project. That's not reflected here, but it is reflected in the FY24 budget. I think we had like $1 million or some number there, right?
Yes, no, and I apologize for that. We, in these financial reporting presentations, focus on the general fund and the capital projects fund, but there are other funds. Dr. Rogers, I think you're speaking to gifts and grants that have their
gifts,
own
grant,
fund.
development work.
For financial reporting and audit purposes, there's not a lot noteworthy happening there in terms of financial transactions, but you're absolutely right. There is a lot of noteworthy gifts and grants being obtained by the district because of all the efforts of our development office and the foundation. And so those are funds that will be going towards construction costs of the new West Las Vegas Library. They're just not reflected in these financials I'm showing you, but they are funds that are significant, and the accomplishments there you'll find in the development office reports. But there's also, I guess I can throw this out there, pretty significant funding opportunities that we're seeking in 2024 that are also going to contribute to the construction, or the fund for construction of the new West Las Vegas Library. There's a appropriation that development is working on right now that could be as much as $10 million that we are considering potentially available for construction, which would really contribute to projects across the board, since you can see that we're well funded for the new West Las Vegas Library. And yes, again, I think to answer your question, that's not reflected here. And I'll throw out one more point since we're discussing this. What also isn't reflected here is funding from the New Markets Tax Credit Program.
Correct. Column B, right?
Yep. We're still working on that program. We expect to close the New Markets transaction either in December or January of next calendar year. The new West Las Vegas Library is a very popular project. It's one that a lot of investors around the country want to be a part of and support. And we're expecting approximately $5 million in federal subsidies that, again, will also be contributing to the cost of construction for the new West Las Vegas Library. So aside from the $56 million in total resources available to begin fiscal year 2024, there are all those other funds, Dr. Rogers, the grants and gifts you're pointing out, along with the new markets funds. Yes.
Thank you for adding that additional context for us.
Absolutely.
I just wanted to make sure that everyone knew that while we talk about the 56 million, there's really more revenue sources outside of the 56 million that's going to contribute and put us even in a stronger financial position.
Yes, that's
for
right.
Our beginning fund balance for the following year. So.
Mm-hmm. And I again wanted to thank all of the trustees for attending today. Again, I wanted to provide all this information to all of you ahead of time since the audit is ongoing. The audit will continue throughout September and early October, and the plan is to provide draft financial statements that have been audited to this committee by the end of October. So you'll have it for review going into November. Luann will be reaching out to all of you very soon to try to get on your calendars, because for the next Finance and Audit Committee meeting, because we will be asking the committee to take action at that meeting. The Hinton-Burdick will be here to present the results of their audit. And so we'll be asking the committee to accept the audit report and to recommend acceptance of the audit report to the board at the November 9th meeting. So we'll try to schedule that sometime before the November 9th meeting. And I know you're all busy, and I'm glad you're all able to make it here today. And we'll do our best to find a convenient time for all of you for that next Finance and Audit Committee meeting. So I can answer any other questions.
Okay, I'll open it up to see if there are any questions from our fellow board members.
I just want to thank you, Forrest, and your team for your continued diligence and for this update.
All right, thank you.
Yes. I think we're all echoing what Trustee Watt said, that, we appreciate the thoroughness and, all the expertise, the way you lay out all the financials with the notes on the side really makes it easy for everyone to follow. And I think you know, we recognize that it's a lot of work, and we recognize that, you know, we don't want to convey that we don't have questions, but because you do such a great job laying things out, it's pretty self-explanatory to just review and follow your presentation of the numbers.
Thank you so much.
So we appreciate that. All right, with that said, that was just for information only. So we will go to our next agenda item, which is public comment. Luann, do we have anyone for public comment?
We do not have any public comment.
All right, then we can adjourn. And do we have a motion to adjourn?
Move to adjourn.
Second.
All right. All right, we are adjourned. Everyone, have a great rest of your day.
Thank
See you
you.
all next week.
Bye.